Whew, I am out of breath. What's good, everybody? Happy Tuesday out there. Welcome to the closing beat. Everybody good? I hope you're good. All is good out there. I just want to let you know that you are in the presence of greatness. Nominated by the USA Today to be one of the top 500 advisors of 2023. I really am out of breath. Shouldn't have done push-ups for the show. Yeah, so we're going to be on a list. I don't know what number we are, and I don't know why. We actually have to say nominated because we wouldn't pay the 100 grand to be able to do whatever it is, use their logo and all that stuff. So it's a bit of a catch, right? It's just they're messing with you just a little bit there. But hey, top 500 advisor, whatever it is, they say we can use it. I'm going to take it there. So yeah, getting better by the day. jazzwealth.com/2023 if you want to download a free, or Haley will send it to you, actually, make it real easy on you. 2023, jazzwealth.com/2023. And she'll send you the file, has all of the year's information on there, things like that, if you're interested in that sort of thing. And I can't pull it up for some reason. There we go. And then also, Guess the Dow. Guess the Dow is officially up and running, man. Officially up and running. So jazzwealth.com/guess the Dow. And if you can guess the Dow, we're closest without going over, we'll send you a $100 gift card. Just got to beat your fellow viewers here. And we'll send you a $100 gift card. Or if you're a client, we'll put $100 in your account. And it doesn't count towards contributions or anything like that. Yeah, thank you. Yeah, top 500. I don't know where we rank, but sometime in April, that thing comes out on the USA Today, and they're like, you can use it, do whatever. But for 100,000, you could do this. And I'm like, okay, so if I see somebody doing that, an advisor, then we know they paid the money, right? Like, that's kind of silly. Anyways. The big news is not us being in the top 500. The big news is really starts tomorrow. So today, nice little rally. I won't complain about it, but the Fed with their quarter point rate hike tomorrow, that's largely what they're going to do. There's an 85% chance they raise by a quarter point. I maintain that they have to raise by a quarter point in order to maintain, credibility in the short term. And so I predict that that's what they'll actually do there. If you're curious, we'll go over here. Here is the average performance on the day of Fed Day based on the decision that they make. So we're expecting tomorrow a rate hike of 0.25% or 25 basis points often referred to. There's been 35 of them in the past. If we analyze those, we find there's an average gain of 0.3%. So overall, it ends up being a positive day. And I might add that the positivity tends to happen in the last hour of the day. So if tomorrow we're just kind of floating around, not doing anything, and then that last hour you get a little burst of energy or excitement, that's actually really normal. The biggest gains, which is only because there's two of them, is when there's a 0.75% cut. And that's only happened a couple times, and those have been in extremely tough circumstances. But otherwise, you get a feel for what's going on there. If you look around, the most common is no change. Just because most of the time they're not doing a whole lot in terms of changes there, and we have a slight gain on the day. So just thought I'd share that with you. Maybe something interesting that you guys learn from, take from, do something with. As far as the S&P goes, yesterday, a decent day, right? We talked about it. We were here and did all of that. The banks, even higher here today. I'm going to pop on over just real quick to the major banks. This would be the XLF if you want to follow along. Big banks with another recovery here today, 2.5%. In fact, if you look across the board at the banks today, there were only There were only a couple that were lower. The CME Group, which falls into financials, and market access. Not really banks in those two cases, but that was really it. Everything else enjoyed a decent day or a really good day higher, depending on where you look. Big banks did the best. JP Morgan, Bank of America, Wells Fargo, you get what's going on there. More popular these days has been the KRE. These are regional banks. If you're not interested in the big banks, you say, okay, let's look at the, not small guys, but smaller than the big banks. Fifth Third Bank up 4.5%. I might point out FRC, nice little bounce here today, although gave up quite a bit of that. Is the biggest gainer in there. U.S. Bank, Truist, PNC, they all did great. Key Bank, Comerica, all very well today. So if you're looking at them as a whole, the KRE is one way to take a look at that. And no real complaints there. Back to the S&P here real quick. It was a decent day here, right? About 50 points or so. 50 points on the S&P. I'm going to back off the volume a little bit because it seems like it's bursting up on you. Sorry about that. Off of support. Everybody likes that support. Remember what we talked about the other day? The further we start to move away from it, the more you convince people that, oh, crap, that was support. I better buy. And that's really what we saw today. It was consistent throughout the day. I'm going to go like this real quick. This is always a good thing. I like to point this out when this happens. There you go. Consistent gains throughout the day. We started strong, meandered a little bit, no real significant attempts at a pullback, and the rest of the day as we go into the end, of course, finished on the positive side. Lots of orders to buy, and that's always a good thing going into a Fed day there. If you look at the NASDAQ, of course, that is almost at new highs there. That is kicking along. The NASDAQ officially for the year up 16.47%. Very good. Good job for them. The Dow is still negative for the year, but now only has 1.7% to go until it turns positive for the year. Same support area. This becomes a major area because look at all the attempts to break through the glass and it couldn't do it. Now we're moving away. If for some reason we start heading back towards that, fear. You have fear in all the Dow investors. You have a reason for them to believe that this will break and likely cause a pretty sharp little move below that. So we'll see what happens. We'll be here. But of course, the Dow is the only one that is down year to date. Russell 2000 adding 30 points here on the day. Not a really interesting support area. It's up 1.3% for the year. Want to point out oil real quick. Oversold. I maintain a very valuable location for people to be interested in oil and wouldn't blame anybody for doing that. If you look at interest rates, kind of a bummer. Quick, sharp reversal in interest rates, meaning rates went up in the short term here, just really from yesterday afternoon into today. That's whether you're looking at short-term or long-term rates. So you had a moment there, which, by the way, these rates falling have helped. So we have existing home sales, you know, they'd fallen for a year straight, 12 months in a row. Every time we get this number, they had fallen. Lowest level currently, or we were, in the last 10 years. Now we see a 14.5% spike in existing home sales. Lower rates helped, lower inventory, and prices coming down. That's the big one there. So a temporary little drop in interest rates made people say, great, I see a drop in interest rates, drop in prices. This is what I wanted. I'm going to go buy. So not bad. That's a good start there. That obviously helped out the home builders and everything today. And rates going up, I don't know, could change things, but for the moment, that's where we stand. All right, I'm going to bounce around a little bit there. I do want to point out something here. We go to semiconductors. There could be crises brewing all over the world with wars and bank issues there. Semiconductors don't care. It's up 20% year to date. That's less than, and if we include today, we now definitely have less than 3% from hitting new 2023 highs. Now, it used to be that transports were the economic barometer. You know, we bought things moved around on the transports to get to the stores. We went to the stores, Sears Roebuck and all that stuff, and we bought things, right? Montgomery Ward, anybody? Somebody? No? Okay. Circuit City? No? Okay, so we'll move on. It's good news for the bulls because we use semiconductors today as our barometer. There are chips in everything that we have there, so it's a really good sign that semiconductors have been able to hold up through all of this. I love it. Very, very cool. Like it, right? You like it? Okay, let's move on. NASDAQ up 16.5, S&P up 4.25. Russell up 1.3. All of this can change dramatically tomorrow with the Fed rate decision there. You now know. Got a quarter point. I don't have much else to cover in terms of things to focus on there. Regional banks, all the excitement here, meme stocks. I saw, what was it, GameStop after hours? I think it was GameStop's up a whole bunch after hours. First profit in a while. Good for them. I see earnings come out here a little bit better than expected. Well, a lot better than expected there. So expect that to be in the news tomorrow. As far as other stocks in the news here today, oops, sorry. There we go. You've got Tesla in the news. Very nice there. I got a debt rating adjustment for them, which basically means they are stable. That's essentially the type of rating they got today. It was a triple B, Baa3, if you want to be geeky about it. So that's where they stand. FRC in the news, thanks to Janet Yellen, of course, giving them a little bit of a boost, saying, hey, we should probably back up all deposits there. And so that helped every bank today. UBS, of course, being a part of that action there, continuing on the excitement of them making their decisions with Credit Suisse. I honestly didn't catch any news on Coinbase. I have a feeling this is still just people chasing the gold play, the Bitcoin play. Sorry, you can't see the charts. A little bit of that going on there. So Coinbase really has been an outperformer here in the short term. Not bad for a company with basically 100% negative profit margin. Yep, they don't have 100% profit margin. They have a negative 80-something% profit margin. So yeah, great job. You know, that deserves to go higher. Harley-Davidson, nice little bounce today. So Harley-Davidson, Morgan Stanley was actually the ones today that said they're going to focus on their core model, do what they do, sell combustion engine motorcycles. And that, if they continue to do this, which they said they will, that means they're worth 30% more than where they stand right now. That was their conservative estimate there. I don't know. I don't know how those electric bikes are selling. I don't see many of them, but nonetheless, back to combustion engine, big hogs, as they used to say, and their ticker symbol is, and that should be good for them. We'll see. Jazz After Dark here tonight. We're going to talk about buying puts as protection. It's actually kind of a waste of money unless your timing is, in fact, quite perfect. Our clients here have an unfair advantage because of the data that we're able to get from Goldman Sachs, which that's what I was going to talk about. Yeah, so I recorded it last night, and I said I'd share a story, and then I forgot the story. I just remembered the story. Anyways, we'll make that a separate thing. But cool data coming in that respect. So if you're interested, come back tonight. We will do that as our Jazz After Dark. Last night, we talked about total returns and price returns and the geekiness behind how you're actually making your money in the stock market with every single sector and index and all that good stuff there. So very, very cool. Oh yeah, Nike after hours did report. I believe that was a beat, what came across my radar anyways. Footwear revenue, I think, is where it was. Let's see what we got here. About $8 billion in footwear. That's better than expected. Inventory is less than expected. Yeah, not bad. There seems to be a focus on the equipment. That's not a big segment for them, like sporting equipment. That is a very minor segment, but it looks like that might have beat as well. And so after hours, not a whole lot. Yeah, back and forth there. I'll take your questions here. If you have any, I will try to answer your questions, and we'll go from there. Circuit City, you got it. Montgomery Ward. I remember where Montgomery Ward was. I used to go in there and just walk around and look at things. 25-point hike coming, then it guessing a pause. Yeah, I honestly think that the excitement will be on what they say, right? And that's been typical lately anyways, but I think that'll be the focus. Are they using any words that indicate pause, wait and see, let's hold tight for a little bit, let's all just walk away, come back, let nature take its course, kind of a thing like that? They'll find some better way to say it than I can, but we'll go find out one way or another. J-Dub, does ensuring all deposits messaging mean that the Fed won't let these few failures keep them from continuing to raise rates? You got to disconnect them a little bit. So the Fed's not focused broadly on that. That's not going to change their minds. I don't see that that'll even be much of a topic for conversation. It'll be a question. Somebody's going to ask that question for sure. Well, Steve Leisman there at CNBC always gets picked on, so I'm sure he'll ask that question. Dividend reinvestment is a good idea. Absolutely. Yeah. The only real time that I don't sort of automatically ask people to reinvest their dividends is if you're living on them in retirement, or you're going through, you have a larger account and you're going through a temporary disability, or you took some time off to be with family or something and you need that income. But otherwise, if you're younger, middle-aged, or still have a ways to go, yeah, reinvest those dividends. I'll actually show, if you go look at Jazz After Dark last night, I actually show you the impact of all of that by index and by sector, just so you can see what the geekiness is there. USOI is a good way to invest in oil. I prefer the oil futures myself. It doesn't take a lot to learn about that. I don't like this here. No, I don't like that one. That's oddly enough done by Credit Suisse. USO used to be the way everybody went. I have a little chip on my shoulder for what they did when oil went negative, so I don't usually talk about that one, but I don't like the ETFs if you can avoid it. Intel ever to reach $32 again? Sure. Yeah, that's not asking that much out of Intel. That's a long play there, but yeah. Yeah. Credit spreads signaling collapse in SPY shortly to force printer. Credit spreads have been tightening quite a bit, and I don't know if historically there's some correlation there. That I don't know. If we do pause, is there a risk that we don't keep inflation under wraps and then it potentially goes way up again like in the 70s or 80s? Certainly. Yeah, that's the fine line they're walking. I'm glad I'm not in that position, but yes, absolutely. Rates peaking at 5.5 would constitute a soft landing. Soft landing would be that the economy doesn't slow into an official recession. So that's what that means. The location of the rates doesn't matter. We could absorb rates here at 5.5% for some time, and the economy may not slow. That hurts inflation, but yeah, it's possible. Thoughts on selling covered calls on a dividend ETF? I'd prefer you don't. You can, you certainly can, but you start waiving the dividend there. Yeah, you start collecting the dividend in the premium, so you got to be selective about the timing of selling those calls. Can you do it? Yes, it's definitely an option. Thank you for the haircut. Just happy to have some hair there for people to cut. Yeah. Oh, yeah. You think that gold was ripe for a loss? I said it yesterday. If you're running towards the safety of gold, you deserve what's coming to you. That was literally, I was trying to be nice. Crude oil versus energy pairs still tradable? Yeah, of course. Yeah, common pairs trade. What can stop the tech rally at this point? Well, it's the most overbought sector in the market right now. In the short term, of course, anything overbought, it's a normal breathing in and out of the of a stock or an ETF or anything. So just normal extension could do the trick there. Anything that shows slowing in the economy, with slowing in the economy and higher rates, that's trouble for them. What's holding them up here in the short term is just how nimble they've been about cutting jobs, cutting the fat just wherever they can. Yeah. Fed gives banks $300 billion. That's not printing. Nope. I know you plan for retirement at X date with Y income, but what about retire with Y income at the earliest age? Absolutely. Yeah. Oh, yeah. Common thing you can do there. Stocking cash for a downturn. Well, you can look at it a couple ways. There are underappreciated areas of the market right now, and if the economy slowed down, they would be in high demand. There are the really exciting sectors right now that if the economy slowed down, money would come out and go to them. So you could say, well, just save some cash and buy discounts on the growth stocks, the cyclical stocks. Or you could say, I'll put my money over here, and as that does its thing, I'll, make the switch. I don't know that that's for everybody, but can be. You're looking for a Jazz app, actually? Yeah. No, it's in the works. We're actually working on an internal app at the moment. So basically everything we see on our side, making that an app, and then using all those features to fine tune and make it look pretty and stuff. And then basically just turn it around and say, here you go, here's your app. So that is not like on the list of things to do. It is currently being worked on and almost done, by the way. I heard something about a January 31st deadline. Oh, wait, it's March. That was when Charlie actually, yeah. That was a dig, yeah. I got him there. Is that what the kids say? That's a dig. Agreed on that similar cutting the fat and oil companies during a pandemic. And look how that worked out for them. So much so that the government got mad at them. All right, speaking of the government getting mad at things, I probably should get out of here, wrap it up. Tomorrow, big day, right? I didn't want to overwhelm you here with too much today. Actually, I forgot a few things, but we can cover it tomorrow and cover the Fed decisions, all the excitement wrapped around that, and for sure, the stock market movement that is to come. So I will be here with you. Be ready to go. In the meantime, enjoy the rest of your evening. We'll see you later on Jazz After Dark if you're interested in some of the more geeky stuff that we talk about here. Adios.